opportunities we have here going into our afternoon. One of the interesting things that has happened here over the last couple of days, and this is not priced into the market. It still isn't priced into the market. We have a Fed Fund futures that continues to price in a rate hike, not a cut, into 2020. So right now it's in 2027. But for a brief moment, as we were going into the end of the week, there was a rate hike being priced into 2026. And you can see how close these numbers are here. You can see that it's being flipped back and forth between March and January. And, we're very close to challenging, pushing into January and potentially into December again. I just want to make note here of this regime tracker. And this is essentially the combination of the S&P and crude oil or energy, and the intersection of gold and bonds. And what are we in right now? Since Wednesday, we've been screaming in the direction of a deflationary boom, where the currency is strong and energy is declining. Great, and it's good for growth stocks and everything. It's natural capitalism. The question is now can we continue this path? We're pinned in this deflationary boom area here, and can we keep getting pinned? This is where the markets are going straight up. I should also mention that in the rally, this 1200 plus rally that we were inside of, that we were never pinned at the bottom of this quadrant. We were pointing in the boom direction, right, the whole time, but we weren't ever actually pinned at it. And so what I'm implying by noting here that we're pinned at that quadrant here is that we're at an extreme. Perception of a continuation of the rally has been priced in. And I want to make another note here is that we were at the top of this quadrant in an inflationary bust back down here. And I'm going to show you what it looks like on the S&P 500 here. When we were down on the daily chart, when we were down here in April. So the last time that we are pinned at one side of the quadrant from the perspective, we've been at the sides, right? But from boom or bust was down here within a day of the low. And my question is this, have we hit an extreme? Take a look at that chart for a moment. We just broke a 61.8% line. To us, that's a double top. That's a confirmation of a double top if we're just looking at the S&P 500, just looking at the ES. What would confirm that is the VIX breaking above its 61.8% line. That would help. Also, confirmation at the end of the day, if we had a daily close below that previous high, it would be a huge confirmation below the 75.40. If we closed below that level, that we were in a double top type situation, and that we would have to start to have 50% shorts from highs to lows that would start to defend. So it's an incredible moment here, especially, we like to make the analogy with the slow boiling pot of water. And things happen very, very slowly as far as momentum shifts from the perspective of longs to, not going straight up anymore. The momentum shift. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.